I've now been in the financial markets for 7 years, and today I've decided to share with you my most effective strategy. It's a trading strategy that can be used for scalping, day trading, and swing trading. For this strategy, we'll need the RSI as a technical indicator, price action as always, and the movement of candlesticks on the chart. And finally, we'll need Fibonacci to set our targets. We're going to start by focusing on the RSI. I'll give you all the settings I use, exactly what to look for, and how to use the RSI in this very effective trading strategy. For the settings, I set it to 21 periods, not 14, not 7. With 21 periods, that's really the most effective setting for the RSI. Next, you can see that I have my overbought line at 70%, my oversold line at 30%, and the middle line right in the center at 50%. I'll come back to that. It's going to be very important in the strategy. So, how do I use this famous RSI, a very effective trading indicator that's widely used by traders all over the world? It's simple. First of all, when the market is bullish, the RSI moves above the neutral zone at 50%, which is shown in yellow. When it's below, well, the market is generally considered bearish in the overall sentiment of traders. The strategy I'm sharing with you is based on the price differences between the RSI and the candlesticks, that is, the chart. You can see here, the market forms a peak. It makes a second peak here. And what we can see on the RSI is that we have a peak here, then the second peak over here is actually lower than the previous peak. Here, we have higher and higher peaks on the chart, but on the RSI, the peaks are getting lower and lower. So this indicates a price difference. It shows a divergence, and the strategy is based exactly on that, because the RSI will allow you to anticipate trend reversals. So, how can you take advantage of this difference between the market and the RSI? That's what we're going to look at right now. We are looking at Bitcoin on the weekly chart, and actually, I wanted to show you the bearish divergence on the RSI, going from $70,000 down to $15,000 at the lowest point. But just imagine the potential of this strategy. You can adapt it to any time frame. If you're scalping, you can use the 15-minute chart. If you're day trading, you can use the 1-hour chart. No matter what, this strategy applies to all charts and all time frames. You'll see it later. We'll switch to the 4-hour chart on another financial asset. The entry signal here is very simple. It's when the RSI breaks below the 50% level down here. That is, as you can see, the market moves above the RSI, then it breaks below the 50% level, stays a little while underneath, and finally drops even further. The break happens here, well, right around this spot. So when we hit back down here, breaking this little upward channel to the downside, we have the entry price for the short trade based on the divergence between the RSI and the chart, which is today's strategy. A second example on GBP/USD, and you'll see here that you can also do day trading. Thanks to this strategy, as you can see again, we have the RSI at the bottom and a market that's going up, making higher highs, while the RSI is going down, making lower lows. Again, we have a difference, a divergence, and so we're going to take advantage of it. You can see it. The break of the 50% happens here, and you really have to wait for this signal before you can sell and confirm that the divergence itself is validated. That gives you an entry price roughly around here, and you can see that with a bit of patience, the market will go lower afterwards. Now, what we can do to set our targets and stop losses is use Fibonacci, which is going to be very interesting. Once we have the RSI divergence confirmed here, and we have the entry price at this point, what we're going to do is place a Fibonacci retracement from the low point to the high point to estimate our targets. So, we take the low point of the last move, go up to the high point, and we include the wicks. We use both the candlestick bodies and the wicks for Fibonacci retracements. That's very important. And then, what we're going to do is target the Fibonacci extensions. That gives you potential take profit targets. Then you place the stop loss at this spot. Here, you have the stop loss. It's about 100 points. So, To have a good risk-reward ratio, you'll aim for at least 2 to 1. Thank you all for your attention. I'll let you practice with this strategy, which is very simple to implement. See you soon.